The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Hello everybody, this is Coach D with TackleTrading.com here to give you a market update and a recap for today. Quickly looking at the Trade Center here, just looking at the big economic picture. As you look across the globe, you see where the Asian markets, European markets recovering in the face of great adversity, and then the S&P market here a little bit flat today, and not very big movement here. Take a quick look at the heat map and get a good look at the overall temperature gauge of the market. And for one day, you got kind of a mixed bag. Some sectors better than others. You got the service sectors coming in a little bit hotter. Financial sectors pretty neutral. And again, always by compare and contrast these bits of information with the chart. So looking at the chart in general, coming off of Monday's pretty good solid recovery, which was done on just typical volume, nothing major. You got a bullish engulfing candlestick, but already today's candlestick where the market shows some just neutralness, that's kind of it shot up, and that's actually a kiss goodbye. If you walk that intraday, that candlestick right there, that long-legged, call it evening star type candle, comes off of the bottoms of those candlesticks. That's the support zone. So if we drop our time frame down into say 15 minutes or so, here's where you can see the kiss goodbye. So here's your double top, kind of an M for murder, new low, and a kiss. Now that doesn't mean it's going to be a complete kiss goodbye. It could recover, but it overall you see that came in there. Let's squeeze in. Let's go 30 minutes here. There you can kind of put it into context. So here's the M for murder, the general run. And then you can see where that's kind of bouncing off of old support resistance back in these zones here. And what I see down on this time frame is what I would refer to as a bit of an alligator pattern, which is engulfing ranges. Now these can be reversal patterns. It can be a continuation pattern. Hard to say which way it's going to go, because what you're basically seeing is kind of a pushing and a shoving match in there intraday. And so as the ranges are engulfing, it's going to be kind of come down to which one ends up clearing and then retesting off of. From the bigger picture perspective, from that, from the big daily chart, the question arises: is this the over out here, the big kiss goodbye scenario that we were talking about earlier that might have occurred a little bit lower price point? And here we have there's a head and shoulder style pattern right in there, boom, inside that correction, and a big heavy drop down on increasing momentum. And then the recovery is kind of already running out of gas. And then you can kind of look at it from this perspective, where you've got overhead trend pressure here, and then you can see where the market's establishing a new higher low. So you can kind of look at it from that perspective of establishing a higher low, support resistance neighborhood, and could rally on through. And just let's take a quick look at the economic calendar here just to see what we have coming up. And as far as the news and information this week, you've got some Federal Reserve FOMC minutes, but not official policy statements. Some housing starts, jobless claims. Those are typical weekly reports, nothing major. You got the Philadelphia Fed business, the outlook survey. Beyond that, pretty light news and information there. And next week, holiday week, you're going to see a pretty light week. Volume decreases, and trading gets kind of quiet heading into the holiday week. So this week, it's going to be a little challenging to identify your direction, because we can see where in the larger context, I'd say, this is a very strong case for potential bullish retracement coming down into a support zone here. But you could also flip that over and say, okay, well, this is a strong move down and a retracement back up. So you can say, well, whoops, didn't mean to rescale that. Let's bring that back down to auto, where this is kind of that retracement back up into the kiss goodbye scenario. Let's cross-reference that against some of the other major indices. Let's look at the NASDAQ. The Nasdaq actually broke to new highs before retesting, and it came down. But with the size of that downward move, boom, these start to look like a shift in trend direction. That's where we kind of get that feel of the head and shoulders, where the hard drop, we looking to see that rally and then probably drop again. Typically a two-leg drop would be consistent with most of those Elliott wave cycles. Let's look at the Dow. Dow, very similar to the S&P, hasn't cleared the major highs yet. Still same kind of thing here, where you can kind of say, well, it came and kind of pressured through the trend zone, but it's still trading in that ballpark right now, and consistent with some previous support resistance zones. It's still more of a kiss goodbye scenario here. Run down here. Now the Dow, interestingly enough, the Dow minis, has some slightly above average volume on the recovery. So that could be a sign, but again, still same shooting star type candlestick. Let's look at the Russell 2000. And the Russell 2000 has been, as far as recovery goes, weakest of the bunch. Came up, kissed goodbye, and it's just, I'd say, smack dab in between its support and resistance zones. And kind of hard to pick a direction on that one here, where you can say, I'd say shot down, boom, retest. And I'd say with the shooting star, I'd expect it to retest the low. So the whole market, I'm kind of looking for a second leg down in general. But I'm looking for it to fade down, not run hard. And for for the volume to lighten up between now and Thanksgiving, and then maybe the market will resume after the Theta giving holiday. Let's take a quick look at the volatility index. And volatility index picked up a little bit with the market dropping, but then it's calming back down at 1750. So it got a little bit higher. That means your option premiums will be a little bit higher than normal, just based off of the S&P 500 implied volatility measurement. That's what the volatility index is. And it's kind of picked up a little bit, so the market's a little bit more tentative. Let's take a quick look at the dollar index. Dollar is breaking to new highs, and I'd say that this is coming off of a bullish flag, and I expect it to retest that 100 mark. Very strong on the dollar. If you didn't catch today's coaches show, I would absolutely encourage all to catch the coaches show. Coach Matt really puts out some just great perspective, great information on what's going on with the currency markets, what's going on with the dollar. So for sure, check that out. It's a great coaches show this week. And then let's take a quick look at crude light. Oil broke near-term lows, trading near a big fat number 40, which could be a significant low, and then it's got that 37.75, call it 38 number. So I'd say right now it's testing 40, and I'd expect it to probably rally back up, retest the support zone before it heads any lower. But I wouldn't be surprised if it came down and retested the big all-time lows. But these are significant lows, and it's not like oil's going out of business anytime soon. And it kind of comes down to supply and demand and inventory. There's also some excellent insight into that in this week's coaches show. And then let's take a quick look at precious metals now, last but not least. Let's look at the gold contract. And I'd say it's broken support, but I'd consider it overextended to the downside. And again, you're not going to see it. I'd say big numbers. Watch the fat numbers. 1075, 1070, 1025, 1,000. And again, putting that into perspective, if we were to drop that back out, it's making recent lows. That's 3-year weekly. Let's drop that out and look at kind of a big picture, real big picture on this. Bring it in. You got some pretty fat support in the $1,000 mark for gold. 1050 is a known support zone. And I'd say I'm a fan of gold. I like owning the paper assets. I have no problem trading the ETFs, selling options, selling puts on them to get premium. If you're assigned, you own it, and it's a great thing to own. And then you own it, write covered calls, protective puts, work on taking profits and converting them into the actual physical. Silver, I think it's holding up a little bit better than gold in general. It's trading down at 14, really close to $14, even big support zone. and it's a little closer to its support zones than is gold. So I like silver in general. Also very, very affordable. Excellent for selling puts, owning the asset, writing covered calls, using options to protect your investment. And it's certainly a good way to diversify yourself against different market risks and some of the traditional flight to quality methods that people institute at some point in time do come into play. So this is Coach D with TackleTrading.com. Again, encourage you all to check out the coaches show. If you missed it, catch the recap, and we'll see you all in the clubhouse.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.